So 0% mortgages are now back. This means 0% down and 0% interest. So I want to break down what's happening because one of the nation's largest lenders is now bringing back the 0% down and a 0% interest on some mortgages. I want to break down who can qualify, what this means for you, and what this means for the entire housing market moving forward. So make sure you stick around for this entire video, especially if you have been looking into buying a home in the near future, because this could be a major sign. Whether it's good or bad, well, that's for you to decide, but I'll break all that down in just a moment. But all I ask is one thing, it takes 2 seconds, go ahead, hit that like button if you enjoy these daily updates, and now let's begin. So if you are like millions and millions of potential home buyers here in the United States, you want to buy a home, you have the income to qualify for a loan, but you're missing out on one thing. That is the down payment. Well, guess what? These zero down mortgages are now making a comeback, and they're making a comeback with a vengeance. I want to read some of this to you because this is actually huge. Millions of people have been waiting for the 0% down to come back. Well, it's here. Look at this. It says the zero down mortgages are making a comeback. One of the largest mortgage lenders in the U.S. is now offering a 0% down payment offer. The new program is from United Wholesale Mortgage. Here's the key. Home buyers who qualify will not need to put down an upfront down payment. Instead, it allows buyers to pay 97% of the home's value with the first mortgage. Then they would provide the remaining 3% with a second mortgage of up to $15,000. That is how you get 0% down, because the first mortgage covers 97% of the home's value. The second mortgage covers the other 3%. This is where things get rather tricky though, because in many states, their average home price is more than $500,000. The reason why this matters is because $15,000, okay, that is the 3% mark of $500,000. So in that case, you would get a first mortgage. This would be the maximum you can get. The maximum would be $485,000 is the first mortgage. The second mortgage would be $15,000. Total, $500,000. Well, look at this. This is the median home price by state and also District of Columbia. But you look at this. Alabama, Alaska, Arizona, Arkansas, and Connecticut and Delaware. You can get a median home in those states and you would be under that $500,000 threshold. But in states like California, Colorado, District of Columbia, there's Washington State, even Hawaii, well, you're actually going to pay more than $500,000 for an average home, and you wouldn't qualify, or you'd have to put some money down, right? This is the thing, though. This is how it gets paid back. Look at this. This is where the 0% interest comes in as well. The second mortgage won't accrue interest, but it will need to be paid back in full. That would happen when the home is sold, the mortgage is paid off, or if the owner refinances. The mortgages are only open to first-time home buyers and those making no more than 80% of the area's median income. This is where people are somewhat concerned. The 0% down is a good idea to get people into the door of home ownership. This works, okay? The 0% mortgage is great if home values are going up and continuing to climb. But it is a terrible idea if we see home values decline. And the reason I say this is because then at that point the borrower would instantly be underwater in their mortgage. Where their mortgage is here at $500,000, their home's value declined to, let's say, $450,000. Here's the reason why this is a problem. If, let's say, your home's value declines and it's $450,000 now, or let's be more realistic, it's $470,000. Okay, that's your home's value. So then you go and sell your home. Okay, you get a realtor. It's like, you know what? I can't afford this. It's too much. I can't make the payments. I can't do maintenance. I just want to get out of it. So you're going to sell it at $470,000 when you currently owe $500,000. That's a $30,000 drop. So you hire a realtor, and that realtor then sells your home. Let's say they take $20,000. Now you're at $450,000. Keep in mind, you owe $500,000. The first mortgage, right? And my guess is you're going to be underwater in this entire thing. So you sell it for $450,000. Well, guess what? You still have to satisfy the bank. Okay? And the $15,000, that 3%, a secondary mortgage, that has to be paid off. How are you going to pay that off if you just lost money? You don't have money coming from your home. How are you going to pay off $15,000? Because that will be due immediately. And if you don't pay it off, it's going to hurt your credit score. There could be a foreclosure if you can't pay it off, right? And so, like, say you can't make payments, whatever, they could foreclose on your home. Here's the problem. Everything is going to be good if home prices go up. But the 0% down payment, 0% interest would be terrifying if home values crash. That's the reason why some are speculating that this could be a major disaster. Keep in mind, this could take us right back to the subprime mortgage meltdown of 2006, 7, and 8. Right? This could be a huge issue. Now, I want to show you a couple things though. Okay? The reason why I want to show you these is because people don't know whether or not this is going to be a good deal or not. But the problem is, it could take us right back to the crisis that we've been in before, right? That subprime mortgage crisis. Now, here's what I want to show you. This right here. It says, the days of ninja loans, no income, no job, no assets, and adjustable rate mortgages are largely gone. We're not going back to 2006 here, according to Greg McBride, a chief financial analyst at Bankrate, says lending standards are light years removed from pre-crisis when there oftentimes weren't any standards at all. Yet Adams, a former Wall Street analyst, cautioned that someone who can't make a down payment and makes less than 80% of the median income is likely to suffer more in an economy when home prices are falling. Keep that in mind. The people that they're going after to give these 0% down loans to, 0% interest, the people that they are now targeting that qualify for these loans, well, they're also ones that will be impacted more as home prices drop. Again, just get this. As home prices drop, let's say your equity drops or your potential net worth. Okay, so your net worth starts to fall. For many low income and even middle income households, if your net worth starts to fall, you don't go out there and spend money. You're not investing. What you're doing is you're taking your cash and you're holding on to it as tight as you possibly can. You're trying not to spend any money, which also means you may not upgrade your home, create more equity, right? Build more value. You might not go and get a second job because you got to worry about other things. This is the problem. As lower income households feel the impact of the struggling economy, it's going to show. And it's going to show more and more for lower income and middle income households. This is part of the reason why, again, the reason why we are seeing United Wholesale Mortgage go after this specific group is because they see a need in the market, of course, but if they can fill that need and they get more people buying homes as opposed to just listing homes, then we'll see home prices go up. But there's no guarantee. That's the problem. So we're going to see what happens. But the good news is, yes, there's now a company, United Wholesale Mortgage, that is willing to put their, their lives on the line and put it out there for people that can't come up with a down payment. So the 0% down payment mortgage is back. And 0% interest on the 3% is now back. So, I don't know if this changes anything for you. I don't know if this puts you closer to potentially buying a home. But according to experts, they are a little bit concerned about how this is going to go down. Whether or not this is going to be the thing that really sets us off and gets us going in the right direction. Or this could completely ruin the U.S. economy. This could completely hurt the housing market. And we could go right back to where we were in 2008. So, we'll see what happens moving forward. All I can tell you is I will be here every step of the way. I will fill you in on all the latest news and updates, but that is what we know as of today. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.